All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. My apologies, I am jumping on just a little bit early here again today. The video should be posted about the normal time, so not going to be a big deal there. But I do need to head out here this afternoon for get the results of some blood work that came in. I think the worst is behind health wise here, but they're still looking at a few things. So hopefully it goes well, and I'll be back on normal times here tomorrow. Now, have been asked about the challenge and when the next challenge is going to start, and what the holiday schedule will be like for the challenge. I will talk about both of those tomorrow, and give you what the plan is here for that. Excited for some things that we're going to be doing during the holidays there. So we'll discuss that tomorrow. And then here this afternoon, not a lot going on. Market itself, just not a lot happening. Just pretty much sitting where it gapped. We've seen this happen, time and time again. And, nothing where you look and go, well, some major changes happening here or there. There's not a lot for the bears to sink their teeth into to say, well, pullback is on the way. And for bulls, it's just one of those where you just be patient and ride, here with things. For the challenge, I have a position on the board, GLD, which is the epitome of flat. The stock's trading at 139.02. We entered when it was 138.76, so the stock has gone our way by 28 cents. Not going to be enough to combat time decay, and that's where we're seeing a little bit of a loss on the option there with it. Since we do have a gain on the option, we are past our red stop date. But with no other signals on the board, I'd rather hold gold than cash, and so I'll continue to hold gold here and run with it. If we do hit bump up to the hard stop date on the 19th, and something hasn't changed, I will have to bugaboo on out of the position here, but gonna hold it here, and still a nice chart, still has the concepts in play, but lots of flat in it, and frankly in a lot of stocks that are out there in the market. Now, this afternoon I was thinking, okay, with everything that's going on, or with how little of what's going on out there, is there something that I could go take a look at that would help the community, from a trade standpoint, or from a current event standpoint? And the answer is no, not really. No, not really. And so I've decided to go out here this afternoon, and this is a request that came in about 3 weeks ago. And I'm going to go out and take a look at the Stochastics 39.1 here with you and show you a scan with it. And how it can be used, because this is something that I used from an investor standpoint back in my fund managing days, and I still use it from time to time as a trade thing. In fact, it is something that when I bring up our challenge trades, you see the indicator come up, and I've used this indicator to kind of demonstrate a general principle. And so while the challenge doesn't use the indicator, it does kind of highlight the general principle that the challenge algorithm is grabbing onto. So let's take a look at it here. The Stochastics 39.1 is a variation of the regular slow stochastics. And so if I come down on my chart and I put an indicator on here, a slow stochastics and a slow stochastics 39.1, we're making a small change, right? 14 days, right? That's the period that the stochastics is looking at. 3 is the smoothing moving average of that stochastics, right? So if we hit update and we look at the 14.3, you can see there's a black line and there's a red line. The black line is the slow stochastics number. It's indicated by a percent K, which just happens to be the percent D on the fast stochastics, but that's another conversation. Then The red line here is just a 3-day moving average of the black line. That's all it is. And so they tend to run together. And traders will look at this and say, well, you buy when the stochastics black line crosses above the red line, and you sell when the black line crosses below the red line. Okay. I don't subscribe to that. I think, if you're going to subscribe to that, you're going to get whipsawed a heck of a whole lot, and it's not going to be a very fun time trading at all, right? It's easy to look at the times where it did work and go, well, what about right here? What about right here? But if you look at all the instances where you get the crossovers and you're looking at, even buying stock, the whipsaws are intense, right? So in the 39.1 that I use, the first thing you'll notice is there's not two lines, right? The one basically says, get rid of this. I don't care about this smoothing moving average, right? It's getting rid of our red line. Could we add it? Yeah, we could add it easy. In fact, I'll show you what it looks like here. I'll just change the parameter to 3, and you can see that now there's a black line and a red line. And if we wanted, we could go out and say, well, we buy when the black line crosses above the red line, and we sell when the black line crosses below the red line, and we'd get whipsawed just as much. So for me, there's no value in it, right? There's just zero value in it, so I leave it at 1 so I don't have to deal with it, right? Now, the difference between the 39 or the regular stochastics that I have up here and the 39.1 is just the day period, right? We're using 39 trading days. This is a time period that was made famous by a couple technical traders, and they used it for various things. And it's something that I adapted to the stochastics many years ago, and have just found nice success with. And so I still use it. But in principle, you could change this to 40. You could change this to 35. You could change the period on it, right? It's not so exacting that, we can't change that. We're still looking at going to get a similar story. And anytime I'm looking at an indicator, that's what I'm looking for. I am looking for what is the story that it is telling me, okay? So what's the story of the 39.1, right? Well, the story of the 14.3 up here is to basically say whether the stock price is high or low relative to the past 14 days. So if we look at our chart up here, and we take November 12th and the price of the stock, and we look at the price of the stock on December 10th, right? The stochastics is going to be high. Why? Because the stock price is at a new high relative to its last 14 trading days. That's it. That's all it's showing. We can see that in the chart, right? It's high relative to the last 14 days. And it's what leads some to say, well, when you're over 80, it's overbought, which is, just malarkey when it comes to the stochastics. Overbought, oversold, use a different indicator. Stochastics isn't meant to show overbought and oversold, but it's showing whether it's trading higher or lower compared to its recent range. So if we come down to the 39.1, what are we doing? Well, we're expanding the range. We're expanding that range to 39 days, right? To 39 days rather than 14 days, okay? What does this do? Well, it's not going to help us with overbought and oversold. But if we go on this concept that, trends begin and then, carry on strong, then a stochastics of this length should help us to find some trend elements, right? Should help us to find when some real nice trending pieces are coming into play. Well, let's see, right? Well, let's see. Well, let's get rid of our 14.3. And again, I just have gold up here, right? We could do this with any stock. But 50 is the midpoint. When the stochastics is above 50, it basically is saying, look, the stock price is trading near the higher end of its recent range. When it's below 50, it's trading near the lower end of its recent range. And so what if we did this? What if we went out and we bought when the stochastics went above 50? I'm not talking options. I'm just talking stock. What if we bought when the stochastics went above 50 and we sold when the stochastics went below 50? How would that work out for us? Well, we'd catch a good chunk of this upward trend. We'd also lose a lot, right? So overall, we're going to gain, and we're going to gain nicely, but nowhere near the highs, right? This is not a call the top or call the bottom type indicator, but it is going to ride the majority of the trend. Then we come a little further. We move back above 50 right here. Let's just say we buy right there. Well, we're out a few days later as it breaks back below 50, right? There's a nice little whipsaw right here. Not immune to whipsaws. Right here, same thing. Another little whipsaw. Right here, we pick up, we buy. We hold until it's above 50. Well, what does that look like? Well, we hold till it's above 50. We're riding from 121 up to 140. We're riding the majority of the trend. Right here, we got a little whipsaw, right? We got a little whipsaw in it. So far, we're still not above 50 when it comes to gold, but moves above 50, what does that say? And when you look at stocks in general, and you're looking at them from an investing standpoint, I don't mind a little whipsaw in investing, right? Meaning, I don't mind going out and buying a partial position on gold and getting a sell. I'm willing to hold that partial position and buy more on the next. I'm also willing to just turn around and sell it. Got me a buy, I bought it. All right, next day, turn around and sell it, knowing I got whipsawed. Doesn't bother me, right? Yeah, do I like it? No. But it doesn't bother me because I know that when I have the run is going to tend to be pretty strong. It's going to be pretty big. And using the Stoke is going to keep me out of big runs against me, right? It's going to really mitigate any massive loss that I might take. Now, it won't mitigate a big gap or something of that nature, but it will help to mitigate the majority of a loss. So if I come in here, and we could take any stock, for example, here's Honeywell, right? Here's Honeywell. Honeywell breaks above 50, right here. Is that calling the bottom? No, not at all. You run, you're still holding Honeywell. Earnings, pullbacks, rumors, trade war, you're still holding Honeywell. Pushes below 50, gotta go. How'd you do? Yeah, pretty well, right? All right. Then it pushes back above 50. You end up getting back in. You go, well, why didn't I just stay in? And well, you know exactly why you didn't stay in. And then it goes and starts to roll over, breaks below 50, and you ultimately have a loss. What's your loss compared to your gain? You buy back right here above 50. You're out below 50. You end up with a small loss. You're back in above 50. Here you are in. You've been riding. It's still above 50, so you're in. You have a decent gain on it. By just using the Stochastics 39.1, have you been able to capture the majority of the gains over the course of the year? Yeah. Have you been able to avoid massive losses? Yeah. Absolutely. This isn't a strategy that's going to make it so you don't have losses, right? It's a strategy that's about risk reward. It means your rewards are going to be significantly greater than your losses over time. This isn't something that I suggest you go out and use and say, well, let me go use it, try it for a week or two. No, you got to give it a couple years, right? This is an investing strategy where you look at and you just say, okay, I'm going to take a stock that, I'm bullish on. And so let's go Netflix. Okay. And so with Netflix, I'm just going to take Netflix, and this is what I'm going to do. I'm going to buy it when it goes above 50. I'm going to sell it when it goes below. So here we are, 2019, goes above 50. Yep, I missed the bottom. Oh, no. Right? And then it goes below 50 right here. So what did I do? I end up banking almost $100 in gains. All right, buy back in right here, and I'm out right here. So I end up giving up $10 in a loss. I know these figures because, well, I've been involved in Netflix this year with this strategy. April, buy back in. May, back out. Small loss. Here we go. Buy back in June. And here we come in July. And this is a pretty big loss. Stoke didn't drop below 50 until after the gap. Stung. Didn't feel all that great. Right? Am I still up on Netflix for the year? Yeah. Still up on Netflix for the year. Right? It's been giving me heartburn, but still up on it. The next move above 50 right here. Then move down below 50 right here, so don't make anything on that. The next move above 50 is right here, and still off and running and up about $40. We have 1, 2, 3 losses, 2 gains. But the gains far outweigh the losses. We could just keep going through stocks over and over and do this. It works pretty darn well. Here's Bank of America. You buy in, you get whipsawed out. Okay. Take a little loss there, a little bit bigger loss because that was a bad day. Here you buy in, right? And here you're out. So you have a little bit of a gain. Here you buy in, right? And then you're out right here. You end up with a little bit of a gain, pretty nominal. Here you buy in, here you're out. Bank of America just simply isn't working, right? We have one decent gain, but the couple losses, offset it. Just really isn't working, is it? And here we go again in September. All right, we're in. Oh, man, back on out. All right, here it goes again. Above 50. Okay, we're going to get whipsawed again. Oh, no, chugga, chugga, choo-choo, off it goes. And you know what? We're in, we're running, we're in the rally, and okay, fine. We're now dealing with a stock where, we're outperforming having just bought and held it, from February, where we're doing pretty well, right? And so as you look at stocks into the new year, and there are a lot of people predicting this is going to happen or that's going to happen, right? And you're trying to say, well, how do I want to be invested? How do I want to own stocks? Take a look at this 39.1, right? Here's Visa, right? It works with Visa. It went above 50 right back here, still above 50, you still run with Visa. Right. Now, you can scan for these, and, this isn't something I ever really recommend that you go out and just run a scan for this, but you can run a scan and take a look at all the 391 crossovers that are happening out there, okay? Now, let me expand this scan here. Let's go to the S&P 500, for instance, right? And here are all the stocks that have the 39.1. Crossing above, let's see, is this one set to 50? Yeah, crossing above 50 in the last 3 days. There are 29 of them, right? 29 entries. UPS, McDonald's, Clack, General Dynamics, CF Industries, Apache, Amazon, right? Amazon's kind of been mired in some muck here, but look at what Amazon has done. And I was, this is one I was kind of disappointed we didn't see a trigger for the challenge come in. But look at the 39.1 moving back above 50, right? Yep, the last one was a whipsaw. But here we go again. And overall, does it pay off to be a buyer of Amazon when it moves above 50? Well, all you have to do is pull up 4 or 5 years of track record, and you know, right? It's one of those where you're going to have a high reward potential. Yes, are you going, or no, you're not going to be right every trade. In fact, you may be right about 40% of the time, meaning have gains about 40% of the time, but your gains will almost always offset your losses. And it's very simple. It's a very easy concept. It's not something that is something where you have to have 5, 10 different formulas, and you have to buy different option legs and hedge for volatility and worry about what U.S. President Trump is going to tweet, and how China is going to respond, and what Russia's doing. You don't have to worry about all of that. You pick the stocks that you're bullish on for one reason or another. You trade them with the 39.1. You buy them above 50, sell them below 50. And you know what? If you do decide that, maybe it does get up here to 90 and you just don't want to run with it anymore, fine. You could take it. Nothing wrong with that. You take it, wait for a pullback. Sometimes, it'll keep on going higher. Other times, you'll hit the top and it'll drop. But there's nothing wrong with that, right? You're putting yourself to where your entries are solid positions, and that is what matters. And then you do have your stop, right? You do have your exit target already in play. And will it feel great to exit, on a down? No, it never does. But ultimately, it pays off over time. All right. So anyway, just wanted to show that here to you. And let me go back and just put the scan here on video just so you can see the scan real quick, what the scan parameters are. Here we go, 391 bull. And these are the scan parameters. And under group, you can, put whatever group of stocks you want. But these are the parameters. And it's just looking for stocks that were below the 39.1 3 days ago and today are above the 39.1. That's it. And you can tighten it up. You can, do 1 day or something like that. Just look at all the crossovers for today. You can expand it to 7 days, but you get the principle behind it there. Okay. Alrighty. Real quick, sorry, I ran the scan here for challenge. No new challenge trades on the board right here. We do have a few crossovers. Juniper has an upside crossover, but consolidation risk is very high. Twilio downside, Pepsi downside, but neither confirming any signals there. So going to run with GLD here into the close, and we'll be back here with you tomorrow morning. Thanks for being with us. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.